Okay, 40 points. Back to being up about 40 points or so as we speak. I mean, just to highlight Interglobe once again, before we went to Sanjay Dogri of UTI Mutual Fund, I was just highlighting a bunch of stocks, and Interglobe was one of them. Take a look at it. It's actually moved up even more from that point. Friday is when it reports numbers, and the playoff between what should be a very good quarter, and on the other hand, this promoter spat should be interesting. Let's see what prevails, but the stock is starting to move up, probably going into the numbers. Well, let's focus our attention on macros now, which isn't really painting a great picture. Data released recently, the auto sales numbers, inflation, and as well as the trade data last evening suggest some slowdown. Lata's here. She's going to put all of that in perspective for us, of course, with specific focus on the trade data, and then we'll bring in a guest to discuss things. Lata.
Thanks for that. The slowdown blues are not new. We have been seeing auto sales contraction almost since September, so that makes it a 10-month contraction. That is reinforced by other data like IIP as well. But the twin data that came over the last 24 hours, WPI, Wholesale Price Index data, it is largely a manufacturer's index data with about 70% weightage for manufactured products. And almost every entry indicated that the prices of goods is lower in June than it was in May. And I can read out the number of products. There is textiles, wearing apparel, leather and leather-related products, paper and paper products, chemicals and chemical products, rubber and plastics, non-metallic minerals, cement and lime, basic metals, finished steel, and finally fabricated metal and machinery products. The entire gamut of manufactured products were cheaper in June than in May, indicating such a demand slowdown, as well perhaps global fall in commodity prices. The trade data only reinforced the sense of slowdown. If you looked at the kind of import data that we have got, the entire gamut showed a negative number. I mean, there was also vegetable oils and pulp and waste paper, textile, yarn and fabric, fertilizers, sulfur and iron pyrites, ores, coal, petroleum, wood and wood. I mean, I can go on. Leather products, newsprint, pearls and precious, semi-precious stones, iron and steel. If there is such an across-the-board slowdown, it means the Indian economy is not able to absorb as much. 10% slowdown in imports and a 9% slowdown in exports, at least half of it is contributed by petroleum, because India imports and 1/3 of that crude is re-exported as petroleum chemicals, specialty chemicals. Clearly, that has shrunk because of both the quantum slowdown, there was shutdown of refineries, and also because of lower prices. But beyond that, even if 5% of the slowdown is accounted for by those products, the remaining 5% shows an across-the-board contraction in the Indian economy in terms of its ability to absorb raw material. So, this is worrisome. And then, of course, you have data coming in, Ashok Leyland shut plant for half the month of July. So the complex is clearly showing that the slowdown has not bottomed out just yet. We are yet to get the first good data.
Okay, well, thanks, Lata, for that. We have Mr. D.K. Joshi of CRISIL, who is joining in on the show to discuss all of this data that we're dealing with in the past few days. Mr. Joshi, just what is your expectation in terms of GDP then? How much do you probably expect in the quarter that is gone by, which is basically Q1, as well as maybe in Q2?
Well, I think the first quarter of this year is not good, and as all the high-frequency data that was talked about mentions very clearly. So it will be similar to what we saw in the last quarter of 2018-19, which means sub 6% growth. And I think from there, growth will start gradually moving up. And if monsoons and stay normal and oil prices remain low, then I think by the second half of 2019-20, GDP can cross 7%. So first half is weak, the second half looks somewhat better. And I think the other thing which will support the second half would be the monetary transmission, which is quite anemic right now. RBI has cut rates and might cut rates more, but this is not getting transmitted into the economy, which will happen, I think, by the second half, because there's a transmission lag. So clearly, I think the there is weakness which is going to continue into the second quarter of 2019-20 as well.
Okay, Mr. Joshi, we spoke to the FIEO, the Federation of Indian Exporters organization, and the gentleman, among other things, also spoke about the rupee being uncompetitive. The strength of the rupee vis-a-vis our trading partners is, according to him, making us uncompetitive. Any thoughts on that? Should there be some active depreciation? Is it possible at all?
Well, depreciation doesn't look like a possibility right now, given that we have good capital inflows, and with the central banks in US, etc., cutting rates, you might see the capital inflow improve. So this is despite economy registering lower growth. So I think as far as the exchange rate is concerned, it's not a dominant variable that influences your exports. I think the dominant variable still is what happens to demand in advanced countries. And right now, there's another layer of complexity that comes from trade wars. After the global financial crisis, what we saw was that the trade intensity of growth was declining, and now with the
Mr. Joshi, there is quite a complaint, and this one came off the record, so I can't even play up the bite to you, of SMEs saying that a stronger rupee also means cheaper imports, and a lot of small guys simply stop making, say, utensils or chairs or small items, maybe even umbrellas, every time the rupee appreciates, because it's cheaper to import it from China.
Yeah, but I think we also benefit tremendously from stronger rupee, because we import a lot of oil, which has, if the prices of oil come down, I think you have positive fiscal implications, positive inflationary implications, positive implications on bond yields. So I think there are players who gain and players who lose from the scenario of depreciation as well as appreciation. It's not symmetric. So clearly, I think the issue is whether economy as a whole benefits or loses. My sense is, I think it's not the level of the rupee that matters so much. It's the pace of depreciation or appreciation. If it is gradual, it can be very easily absorbed. When it becomes sharp, I think then it gives a hit.
Mr. Joshi, based on all of this data, what are you expecting from the RBI in August?
Well, I think the rate cut is very likely, and I think weak growth, core inflation coming down, overall inflation not showing any signs of a significant pickup, though some pickup is happening. So clearly, that is a case for a further rate cut. So August, we see another 25 basis point cut.
And how much more for the rest of the year?
Well, again, I mean, I'm tempted to use the term data-driven, but I think I would see another possibility of 25 basis point cut.
Number you're going with?
Scenario.
Okay. Your GDP number for first quarter, second quarter, third quarter?
Well, we are in the process of reworking the numbers, but I think the first quarter number is around close to 6%, and the second quarter marginally above that. The change takes place only in the second half, where I think with normal monsoons and with oil remaining around 70, we see growth crossing 7% in the second half.
Okay, Mr. Joshi, thank you very much for taking those questions and being with us here on what is, of course, an important sequence of high-frequency data points, which all practically point to the same thing, that the economy is not in a good shape. But how do these macros translate finally to stock markets? Sanjeev Prasad of Kotak Institutional Equities says that the big question is if the Indian market and growth stocks will trade at current high multiples if the current slowdown in the Indian economy was to be more prolonged than the market's current expectations. I mean, he actually says, growth stocks without any growth, and how long the P multiples will last. He goes on to say the Indian market has hardly seen any correction despite growing growth worries, as the market has found comfort in the accommodative monetary policies of major central banks, lower domestic and bond yields, and hopes of an economic recovery. They have removed, that is Kotak, they've removed Bajaj Finance from their recommended large cap model portfolio, and they've added Indigo.
Okay, so those Bajaj Finance removed from the portfolio is something. We'll take a break now, but up next, F&O Strategies, Gaurav Bissa of LKP Securities will be with us.
फैमिली की डिमांड्स और ऑफिस